Alright, so this video is on Salesforce, and the question is the stock in trouble? Why do I ask that question? Well, they announced earnings in late May, and price just fell off a cliff, resulting in one of the worst days in the history of the company. Now, to help answer that question, and before we look at the charts, let's look at this article. It is coming from Nasdaq.com. So shares prices of Salesforce plunged last week after the company released its latest quarterly results. While the business is still growing, it didn't provide analysts and investors with the level of growth they were expecting. Now, should investors consider buying the dip to take advantage of what might be just a short-term issue? Or does Salesforce have bigger problems on its hands? Now, Salesforce stock had its worst day in decades after posting its first quarter numbers late last week. What was particularly noteworthy was that the business fell short of analyst expectations for the first time since 2006. So that's going back almost 20 years. Salesforce has typically satisfied investors and analysts with its results, but not this time. Salesforce's stock trades at more than 40 times its trailing earnings, and that's after factoring in last week's sell-off. It's a high valuation for a business that is expecting just single-digit growth for the current quarter. Now, at a high earnings multiple, investors are going to expect much better results than what the company delivered in its most recent quarter, as well as in the future. And with the stock still not exactly cheap, there's room for shares of Salesforce to slide further down. All right, so you got a little bit of the fundamentals. Now we're going to get into the technicals. Again, daily chart, and we can see price is now below this 200-day moving average, which serves as a secular land in the sand bear bull situation. In this case, we are below, and when you are below the 200-day moving average, it tends to lead to a secular bear market. Now, to get a bigger perspective, we have to zoom out, and we're going to zoom out to the monthly chart. And what we see on the monthly chart, one can say you have a triple top, in which we see the most current leg has been down. Now scrolling down to the daily chart, rather the weekly chart, we see price closing below this uptrend line. That kind of gave you clues that the momentum to the upside was dying down. Also, price was coming into resistance. So this had all the makings of a collapse in price before earnings. Now the question is, where's price heading next? Let's just zoom out to the monthly chart again. We have a critical resistance support band at about that 191 level. So just keep that in mind. It's not the prettiest seller's level, but you now have sellers on the weekly level. And then zooming down to the daily chart again, you did have a major gap fill, and since price bottom, short term anyway, price has been moving up slowly. So the question is, you're in the middle between resistance and support. And when you tend to be in the middle, price action tends to be choppy. Now for this, we're going to scroll down to the 4-hour chart. And based on this 13 simple 4-hour moving average, we could see momentum to the upside and potentially close that gap as price is now above this white line. You can see the huge sell-off on a very, very high red volume bar. But since then, you did have buyers come in. And so at this moment, the chart is suggesting we're going to close this gap. And although fundamentally the stock is overvalued, technically the chart suggests we could see more upward momentum in the stock price. Thanks for watching. Subscribe. Please like the video.